Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop us a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic, bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Welcome back, ladies and gentlemen, to another episode. And today's video is going to be very interesting, so stay with me to the end. Imagine for a second the entire plumbing of the global financial system gets ripped out and replaced. We are talking about the pipes that move $150 trillion a year. Now imagine one asset is designed specifically to be the oil in those pipes. We aren't talking about buying coffee. We aren't talking about NFTs. We are talking about the bedrock of international banking. There is a massive debate raging right now about XRP. Is it just another token, or is it the sleeping giant of global liquidity? New economic models are floating around, some suggesting theoretical valuations of $8, $33, and even $83. But are these numbers pure fantasy, or is there actual math behind the madness? Today, we're tearing apart the data. We're looking at the $2.5 billion war chest Ripple just deployed, the liquidity/reserve model, and the market capture scenario that has everyone talking. If you hold even a single token, or you're just watching the crypto space from the sidelines, you need to understand the mechanics of what I'm about to show you. Because once the infrastructure is built, the game changes, ladies and gentlemen. Let's break it down. Okay, before we get to the price models, and yes, we're going to break down that $83 number, we have to look at the foundation. You can't build a skyscraper on quicksand, right? Most people look at charts. Smart money looks at the infrastructure. Here's what you might have missed while everyone was distracted by the daily noise. Ripple, the company building the rails for XRP, has been on an acquisition spree. We're talking about serious moves here. Just this year, they poured over $2.5 billion into strengthening their ecosystems. They bought Hidden Road, which is now Ripple Prime. They acquired G Treasury and Rails. Why? You might ask. Why spend billions buying boring back-end financial companies? Because they're building a bridge. The goal isn't just to send money. It's to replace the rusty, slow, expansive system we use today, SWIFT, with something instant. Ripple Payments is designed to use XRP as a bridge asset. Think of it like this. You have dollars. You want to send yen. Usually that money has to stop at 5 different banks, pay fees, and sleep overnight in a vault. Ripple wants to zap it instantly by converting dollar to XRP, XRP to yen. Done. Seconds. That is the utility. That is the use case. And that is where the wild valuation models come from. Now let's talk about the numbers that are recently making rounds. Recently, analysts and AI models have been crunching the data to ask, what happens if this actually works? Let's look at the market capture model. This is the best case scenario, the one that has the bulls extremely excited. SWIFT processes roughly $150 trillion a year. That is a number so big, human beings can't even comprehend it, ladies and gentlemen. The model asks a simple question. What if XRP captured just 10% of the market? Just 10%. If XRP were to handle 10% of the volume, the ecosystem would theoretically need about $5 trillion worth of XRP to facilitate those trades. $5 trillion. Now do the math with me. We have a circulating supply of roughly 60 billion tokens. If the system requires $5 trillion in value to operate, you divide that by the 60 billion tokens, and what do you get? You get $83.33. To put that in perspective, if you held 1,000 XRP today, trading at $1.90, you can do the math. Now hold on. Take a breath. Let's assume perfect execution, ladies and gentlemen. It assumes banks ditch their old systems. It assumes regulations clear up globally. But it shows you the scale of the problem XRP is trying to solve. When you tackle a multi-trillion-dollar problem, the math gets big fast. Okay, maybe you think 10% of SWIFT is too aggressive. I get it. Let's dial it back for a second here. Let's look at the total cross-border payment model. This model looks at everything: remittances, corporate transfers, consumer spending. That market is estimated at $200 trillion. If XRP facilitates just 5% of those flows, the network needs about $2 trillion in active liquidity. The math lands us at roughly $33.33 per coin. For that same 1,000 XRP holder, you're looking at a portfolio jump to $33,000. Still a massive 1,600% increase from today's levels. But let's go even more conservative. Let's look at the liquidity reserve model. This is my favorite one because it's based on how banks actually work. Banks hate holding dead money. If they have to keep billions in nostro vostro accounts just to facilitate trades, that capital is doing absolutely nothing. It's dead. The idea here is that the banks use XRP to free up that capital. In this model, imagine 1,000 major banks holding $500 million in XRP as a liquidity reserve. That's a total demand of $500 billion. Divide that supply, you get a price of $8.33. $8.33. That is the conservative institutional adoption model. And even if that is just a 330% move from where we are sitting right now, well, now here's the secret sauce that nobody talks about. It's a concept called velocity. This is what ultimately drives these valuations. Velocity is how fast the token can be reused. Think about it. If I send XRP to Japan and it gets sold immediately, it can be bought by someone else to send money to London 5 seconds later, ladies and gentlemen. If velocity is super high, meaning tokens move instantly, you actually need less total value in the system. But if velocity is lower, meaning banks hold the tokens in reserve, like the $8 model, the price pressure increases because the supply is locked up. This is the battleground, ladies and gentlemen. The price of XRP in the future will depend on two things. First, adoption. How many banks actually plug in, okay? Number two, velocity. Do they hold it or do they just transact with it? We are seeing Ripple build the infrastructure to make sure the utility is there. The question is, will the volume follow, ladies and gentlemen? Look, we're standing at the crossroads in financial history. The current system is archaic, anemic, it's slow, it's broken. Something will replace it. Whether that is XRP, stablecoins, or CBDCs remain to be seen. But the models we looked at today, the $8, the $33, and the $83, they aren't just random numbers, folks, pulled out of a hat. They're calculated based on the sheer magnitude of money that moves around this planet every single year. So if XRP becomes even a small part of that plumbing, the liquidity shock could be unlike anything we've seen in crypto or in our lifetimes. But remember, technology adoption takes time. The internet took 20 years to disrupt retail. Crypto is still in the dial-up phase. But if you're here watching this, you're paying attention before the rest of the world catches on. If you found value in this breakdown, smash that like button. It helps the algorithm get this data to more people. Subscribe if you want to stay ahead of the curve on crypto infrastructure. Remember, this content is for informational entertainment purposes only. It should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button. Ring the bell. Leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends, shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.